my name is Steve Philp, and I'm director here at Portugal Pathways, and I'll be your host for today's webinar. Today's webinar is all around NHR tax regime and what to do post that particular regime. Now, obviously, the NHR tax regime, having closed to new entrants on the 31st of December 2024, means existing NHR holders are increasingly focused on understanding what happens after their 10-year period comes to an end. So today's session is designed to explore general considerations around post-NHR taxation, why early planning matters, and how engaging with qualified cross-border professionals can help individuals gain clarity well before their tax status ends. Before we begin, a real sort of quick reminder of housekeeping. So this webinar is for general information only. Everyone's circumstances are different, and nothing discussed today should be taken as personal tax or legal financial advice. Now, during obviously the webinar today, we encourage you to submit questions, leave comments in the chat. And again, we will address as many of those as we can during the webinar and also into the Q&A. Any questions that we don't get to, then the team at Portugal Pathways will follow up individually with you. And obviously, we'll be inviting you to arrange no obligation personal consultations with our panelists or Portugal Pathways experts today to discuss your specific circumstances. So let me introduce you to your panelists. Firstly, we're joined by Chris Marsden. So Chris is the CEO at the Algarve-based Beacon Global Wealth Management Company. Joining Chris is Duarte Monteiro. So Duarte is an associate partner at RFF Lawyers based in Lisbon. Let's get underway. So Duarte, I'm going to start with you, just really to sort of set the scene, the context. So once the NHR, the 10-year NHR period ends, individuals who remain tax resident in Portugal may become subject to the standard Portuguese tax framework. Can you explain what typical changes from a legal and tax perspective when the NHR ends?
Sure, Steve. Thank you so much. First of all, as a rule, when the 10-year ends, NHR holders become regular taxpayers in Portugal, like myself, for example. And it's not the best thing in the world. As a rule, we can, for example, using a couple of examples, we're thinking about pensions, pension income. Nowadays, subject to 10% flat tax rate, it will become progressive tax rates up to 48 or even 43 if surtax is applicable. The same, for example, I don't know if there are any workers among our audience, instead of the 20% flat tax rate, again, progressive tax rates up to 53%. Passive income, dividends, interests, instead of being exempt of taxation, as they are as a rule, will become subject to a taxation of 28%. So in terms of taxation, this is usually what happens. It is, of course, important to say that all the treaties that Portugal has signed, and we have numerous treaties signed, 78 or 79, if I'm not mistaken, are in force and can be used. So as a rule, if there is any taxation to be paid at source, I'm thinking about passive income, for example, this can be deducted to the amount of the potential amount to be paid here in Portugal. This is what I have to say. Of course, that it is important to, but we will discuss this down the road. It is important that before the end of the 10 years that anyone prepares anything to do, either moving or thinking about different strategies or thinking about any different structure to be put in place. But if nothing happens, this is the general taxation that anyone can be subject here in Portugal.
Thank you, Dwight. Thank you for that overview. So, Chris, coming to you. So, what sort of conversations have you had with NHR tax holders, and what are the most common misunderstandings people have about life after NHR?
That's a good question, Steve. I think if we go on the common misunderstandings, I mean, we do get people who think that sometimes you can extend your NHR, but they think maybe that it's not a set 10 years, or if you've got NHR in, and haven't been in the country for a couple of years, that it's for the years you're in the country, when actually what it is a set 10 years from when you take it. I think one of the other misconceptions that sometimes happens is, the Portuguese tax year runs from January to December, and it will start in the January of the year that you become tax resident. So if you become tax resident in November, December, then you haven't got that whole year of, you kind of probably only got 9 years and 2 months of NHR. I think the other area is probably ignorance, is that people just don't think about it. When you've made the big decision to move to Portugal, you're living the life in Portugal. Your children are at school. You're making friends. You're finding lovely bars and restaurants. You're enjoying the weather. You're enjoying the country. People just don't think about what happens when it ends, and it's one of those shocks that comes kind of 7, 8, 9 years in, when they're there thinking, okay, what do I do now? Whereas if you have these conversations in the first 2 or 3 years, it does make things a bit easier.
Exactly. Thank you, Chris. Thank you. And also, Chris, I'd just like to stay with you from a planning perspective. So again, what does a sensible and early approach look like for someone who still has sort of several years left on their NHR?
Well, we do wealth management and financial planning. So you'd be amazed if I didn't say the earlier you start, the easier it is. But it is so true in the post NHR period. You'll be so grateful and thankful that you spent the time to do the research, have a look around, think about what you might want to do, and see where you want to end up. It's an early review is vital. Look at where you are, look at where you want to be, because the longer you leave it, the harder it will get. Look at engaging qualified professionals. Make sure that you work with tax people. Make sure you work with qualified, respectable wealth management people who understand your goals, understand what you're looking for. They're not trying in any way to shoehorn you into anything. It's about making sure that what you have going forward is what you need. And what does time always gives us options. It means we're not rushing, we're not charging around to make a decision that we don't need to make. So understanding your options is a very important thing, because there's no one size fits all solution. Every client is different, and it really is, the earlier you start looking at this and we can put your financial plan in place, then the better your goals, your outcomes and your goals will be at the end of the NHR period. I mean, NHR is great while it's there, but it's not there forever. So you do need to plan for after it.
Lovely. Thank you, Chris. And just for our audience, so we get a little bit of feedback, and we put another poll up. If you could just sort of share your thoughts, and then we'll just review that in a question or two's time. And the question is, what is your biggest concern when thinking about the end of NHR? And then obviously what we'll do is we'll just look at the answers, and the most sort of popular ones we'll just sort of discuss the narrative around those answers. So yeah, that'll be popping into your screens just now. So again, Chris, I'm just going to sort of just stick with you for the very short term. I understand that every person is different, requires a personalised approach. But to give the audience more of an understanding of the planning process, could you maybe talk us through the vehicles used to plan early, sort of what they are, how they work, and obviously why they are so beneficial?
Yeah, no problem. I mean, there are many vehicles that we can use. From holding the assets in standard, kind of investments, unit trusts, stocks, shares, to wrapping them up into insurance structures, which will give different tax. It just depends on what your view of risk is, what your view of what your view of the investment horizon is, and also how tax-wise you want things to look for yourself. But the thing is that to remember that what we as financial planners do is we will sit down with you and we will make sure, if you tell us what your concerns are, what your worries are, we will make sure that we put a plan in place that achieves your goals. If you're US, if you're UK, if you're Irish, if you're French, if you're Swiss, cross-border and anything like that, all of these things will come into play and need to be thought about when putting the plan in place. If the longer you hold something in general in Portugal, the longer you hold an asset, the better the tax treatment of it is. So, for instance, if you hold a unit trust, if you hold it for 8 years and don't buy or sell or make any changes to it within that time, the tax rate comes down to 19%. If you hold it in an insurance structure, that tax rate comes down from 28 to 11.2% on the growth. So there are varying options that you have out there. If you hold them in deposit funds, then they will be taxed at interest rates. So it's just from a point of view of the client, it's very much making sure that we use the vehicles that are out there, start them early, and put you into a position where you can achieve what you want. I mean, one of the big attractions that most people get from NHR is that they're retirees, so they have pension income, and it's working out how that pension income is taxed in Portugal. Is it taxed at the flat 10% rate through NHR, or are there ways that the Portuguese authorities might deem it, some of it not to be pension income, some of it to be other income? So it's quite a complicated area, but we will hold your hand, walk you through it, and make sure that what happens is you get the outcome you desire.
Okay, thank you, Chris. Duarte, coming to you, are there any sort of general legal considerations that make early review preferable rather than waiting to the final year of NHR? You're on mute, Duarte.
Sorry. Very numerous options, and picking up a little bit on what Chris was saying. One of the most important things that's not only counting with reliable partners in Portugal in this case, but also with source countries. So if we are talking about an American source, for example, of taxation, it's one thing. If we are talking about the UK source of taxation, it's one other thing. So simply as important as having help in Portugal is to have help in the US or in the UK or any other country in the world. That said, and as the regime is valid for 10 years, one thing that I say a lot in my meetings with clients is that, of course, that the clients don't have a crystal ball, but we must try to have. The regime is valid for 10 years, so it is important to analyze everything that will be the income through these 10 years and what will be after this, and start planning in advance. Chris mentioned a couple of options that already exist, but it is also important to understand that Portugal taxes based on residency. So every day that someone is a resident in Portugal will be subject to taxation. And Portugal taxes at the moment of when the income is generated. So let's imagine one scenario where we are adding to the end of the 10 years. Perhaps it's important for anyone to understand if it is necessary to change the tax residency in Portugal, because it is. It's a formal request that anyone must comply before the Portuguese tax authorities. And sometimes it takes 1 day, 2 days, some other time it can take weeks. So if, for example, someone is expecting to receive a huge amount of dividends by the end of the 10 years of the NHR, dividends are exempt of taxation under the current regime. And if someone is expected to receive this by the end of the NHR, it is very important to plan ahead so that they are not subject to taxation without the NHR. As we speak, so today, and Chris briefly mentioned this, a couple of years ago, there was the perception that it would be possible to renew the NHR. And it would be possible. 10 years, 5 years out of Portugal, and then coming back to Portugal for another 10 years. Nowadays, this is not possible. First, because the NHR has ended. Secondly, because all the current regimes that we have cannot be used. And this is, unfortunately, if I may add, expressly mentioned in the Portuguese legislation, so anyone cannot use these new tax regimes if they have benefit from the NHR before. So this is basically planning ahead, being careful. The Portuguese tax authorities are attempt nowadays, so we must comply with proper registrations. We must comply with giving the address. It's not only to the Portuguese tax authorities, but be careful with the address before the banks, with the address if there's a house that was purchased. Be careful with property tax, because sometimes tax authorities have this in consideration for tax residency purposes. And one other thing, Portugal taxes accepts partial residency. So it is possible for someone just to be partial resident. It's not until the end of the year. This is a little bit on the question regard to Chris on the first block of questions. This is sometimes an idea that the applicant have, is that I'm taxed now, so I will be taxed the full year. It's not necessarily true. Of course, that we have to have in considerations if this someone is in Portugal, if it is in another country. And again, changing formally the address, it's very important, either to become Portuguese tax resident or not to become a Portuguese tax resident. If it is outside of the European Union, so holders of residency authorizations have this in consideration. It is possible to cancel your residency authorization, for example. So perhaps planning ahead, it's the most important thing to do. And I believe that I will stay here, but basically, and in a nutshell, it's planning ahead, having in consideration that it is valid for 10 years. The 10 years end close than we think. So sometimes we believe that 10 years it's a lifetime. It is not. So have this in consideration. And have one other thing, trying to finalize. I'm speaking a lot. The NHR accepts suspension. Okay, so sometimes it's another thing that people are not aware or not always aware. And thinking about, for example, capital gains that, as a rule, are not exempt of taxation in Portugal under the NHR. If there's anyone expected to receive a big amount of capital gains, NHR, it's possible to be suspended. Okay, so it is valid for 10 years. It can only be used for 10 years. But if within this period of 10 years, anyone moves their tax residency to another country and there become a tax resident, it is not a problem. When they come back, let's imagine that someone suspends at year 5, is outside of Portugal between year 5 and year 7. This someone can come back to Portugal and take advantage of the NHR for the last 3 years. I will end here, Steve. You're muted.
Yep, thank you, Duarte. Sorry, yeah, I'm muted. I think I've got a bit of feedback, so I just want to make sure that I'm muted for everybody. Thank you for that, Duarte. So obviously, just looking at the poll that we put out there, which was the question was, what is your biggest concern when thinking about the NHR? From the replies that we got, which were sort of significant from the audience, there's a sort of a clear winner, as it were, in terms of what the biggest concern is, and it is around the uncertainties around future tax treatments. So again, I mean, obviously we've talked a lot about planning early and understanding. What else can individuals do to obviously sort of allay those fears, the sort of uncertainty around those tax treatments? Again, Duarte, I'll come to you first. What other things can people do?
What we always suggest to have is the analysis around NHR does not end at year number 1. The regime is valid for 10 years. The stream of incomes of any applicants, as a rule, are variable. So it is important to have a constant analysis on what is going to happen. We usually start, or as a rule, we start with a tax analysis before anyone becoming a Portuguese tax resident. Okay, so we prefer to start with this so that anyone, before becoming a Portuguese tax resident, fully understands the tax impact of becoming a Portuguese tax resident. But this keeps changing. This can change every year, or every 3 years, or every 2 years. So the most important thing that we strongly suggest in every scenario is that to anyone changing their stream of incomes, to plan ahead. So in advance, if possible, let's have an analysis of the tax treatment of this new stream of income. If possible, let's restructure this in order so that it is compliant with the NHR. A couple of the scenarios that Chris mentioned, some others with different jurisdictions that work well with the NHR. At the same time, we need to be careful with anti-abuse clauses and stuff like that. So it is important to have preliminary analysis. And again, sorry for repeating myself, it's not only important to have the expert in Portugal, but also to have the expert in the source of the income. A common mistake is, for example, for an American client, you have a very specific type of taxation, worldwide taxation, taxation based on nationality, not on residency, taxation based on having certain corporate vehicles. That for Portugal it's one thing, for the US is something completely different. We Portuguese experts are not aware of the full impact of incorporating a Portuguese company. For example, to use a simple example, this is something that should be analyzed from the US side or from the UK side. Again, and we always come back to the same. Analysis in advance. Let's not wait last minute. Let's be careful with the structures that we are incorporating. Be careful that the NHR is very good, but it does not work so well with tax havens, for example, blacklisted jurisdictions. So let's avoid the common islands, British, US. So all of that requires a permanent analysis along through the 10 years.
Thank you, Dwight. And for anybody in our audience that obviously clicked on that answer and that wants to, have a no obligation consultation with one of our panelists to discuss their specific scenario and situation and plan, we've just popped a schedule a call. So please obviously take advantage of that. And if you have got concerns about the uncertainty around future sort of tax treatments as they align to your own NHR, please obviously take advantage of speaking to an expert on a no obligation basis through Portugal Pathways. So obviously thank you very much for that. And again, we'll just sort of get back to the main sort of running now with regards to the actual webinar itself. Oh, we've lost Dwight for 2 seconds there. If he's there. Dwight, are you here?
I'm here. Sorry.
We just lost. Oh, there you go. There we go.
Sorry.
Thank you. Okay. Chris, I know that there's been a lot of international political change over last year. How does this impact people from, say, the UK or US, for instance?
Well, I mean, the political landscape in the last 18 months has been tectonic, I would say, in the way it's changed. We've seen in the UK, we've seen the 2 budgets which have caused. I mean, if you're living in Portugal, they're probably very, very good news for you, because they mean that you now have certainty how you can get yourself outside the UK inheritance tax net. If you're US, then there are some of the political things there that it may be that's what's driving people to move to Portugal and to take up NHR, or already taken up NHR. I think one of the things we have to be very careful about there is the impacts on people are very, very very important to be looked at in the round. And it's one of the reasons why as Duarte said, you need to be talking to people on a regular basis about this. You talk to your tax advisor, talk to your lawyer, talk to your wealth manager about these changes, because these can make significant issues to your wealth, significant change to the wealth that you have. For instance, if you're someone who's been living, if you're a UK national who's been outside the UK for 5 years on NHR, you've got your villa in Portugal. Previously, that would always form part of your UK inheritance tax estate. 40% of that would have been payable to the UK government. So, you've got £1 million property, 400,000 or €1 million property, 400,000 euros of that would have gone to the UK government. Now, if you stay outside the UK for those 10 years, you can avoid paying that IHT on that property because it's a non-UK asset and you would be outside of the UK IHT net. Now, that saves you £400,000 without even doing anything. So there are some really, really big issues around here that you need to be hold of. And, internationally mobile people, as are on this webinar, will understand that being internationally mobile has some significant advantages. The weather being one, but also the treatment of taxation. But the one thing I would say is what I've seen over the last 18 months, I haven't seen in 40 years of working in the financial services and wealth management industry. Some of the things that have changed so dramatically, particularly I have to say in the UK, but equally in Europe and equally in the US, there are some, there have been some big changes that we need to keep on top of, and that is one of the reasons why people like myself and Dwight, we love talking to you on a regular basis. We like to see our clients twice a year. We want to sit down with them. We want to talk to them. What's changed in their life? What are their goals? How's everything moved on? Are they still where they were this time last year, or have they had grandchildren added, or are they looking at moving back to the UK, to Ireland, to the US? It's all of these things, and that's where it's important that you have an ongoing relationship with your advisors. I think you're on mute, Steve.
Mute, Steve.
Apologies. Sorry. So I'm not used to being on mute. I was just saying, let's segue for a moment and talk about Portugal's economic outlook. What's the sort of general sentiment from international investors in Portugal right now? And are people sort of optimistic about Portugal's future?
We are probably at our best moment. I don't know if anyone followed in terms of economic marketing, if I may say this expression. We were considered the heat economy by The Economist in 2025. So this shows, of course, a trend that investors and all players in the investment market in Portugal are comfortable and are investing in Portugal. This is important. There are a lot of things happening in Portugal, some of them connected with what Chris was saying. Allow me just a common and recurring joke between tax lawyers in Portugal in 2025. That was basically that the two competitors for tax lawyer of the year were Donald Trump and Rachel Reeves. So as you can imagine, what is happening in the US, in the UK has huge impact in Portugal. We ourselves have our own problems, as probably everyone at this table or at this screen knows, with our citizenship changes that are not changing and then are changing again, but that's subject to another webinar. That said, the environment in terms of economic growth in Portugal, we are growing, we are still growing more than the European Union, above the average of the European Union. Of course that we have our housing crisis, but I can say, and without trying to enter a lot into the Portuguese politics, we can say that things are trying to be done, at least. There are reforms on terms of the housing problem in Portugal. There are reforms, and this is for everyone that is a resident in Portugal now, regarding the health problem in Portugal, regarding the access to health in Portugal. So, and this is all economy. If the economy is going well, everything will, of course, be improving as well. That's sad, and a little bit of the struggles that we are still facing, and continuously connected with what Chris was saying as well regarding what is happening in the US and the UK and in all the other countries. And I usually say this, which is everything that is happening, it's not only in the UK, the inheritance tax situation, that there was the recurring discussion in Switzerland, for example. It went to the referendum and it didn't pass, of course. There was a discussion in Brazil We don't have an inheritance tax. Sometimes I start my meetings and my webinars without saying that one of the most important things in terms of taxation in Portugal is it's not only with what we have, but also what we don't have. And we don't have inheritance tax. We don't have wealth tax. So even in a scenario where we don't have the NHR, we also don't have these two situations. And this is important for investors and to plan ahead. That said, we are still facing problems, and not only regarding the taxation, but I would assume that a lot of our attendees are also applicants or holders of residency authorizations. Of course, that we are having a lot of problems in the Portuguese immigration authorities, and all of this is connected, but hopefully everything will be a little bit better by 2026. The government initiated a series of measures to fight the backlog in IMA, and we can see some improvements. Why is this very important for this webinar? Because without having the proof of your appointment before IMA nowadays, the position of the Portuguese tax authorities is that you cannot become a Portuguese tax resident, for example. So obviously things are connected and should be addressed simultaneously.
Sorry. Thank you, Duarte.
Off topic, but connected.
No problem. No, it's very, very concise and a good overview there. Thank you very much. Chris, with sort of tax and policy changes happening internationally, again, how important is it for international families to have cross-border support rather than just focusing on one sort of jurisdiction in isolation?
Well, that's a really good question, Steve. I mean, the majority of people that we deal with are non-Portuguese nationals, so they're already cross-border. So, you know, we would be dealing with US, UK, Ireland, France, Spain, you know, Italy, you name it. We have people from all over, and so you're already cross-border. So you're already what I would call like a third country national. You're in a third country. So from that, I think it's very important that you understand how not only how your planning affects what you do in Portugal and how does it affect how you work in Portugal, but also how does it affect you back in your home country. So, you know, how does it affect what you do, what happens in the US? How does it affect what happens in the UK or in Ireland? And also, it also shows, I also think that if somebody's up sticks and moved their family or their life from one country to another, then maybe they'll do it again. And it may be that actually what might happen is they look at it again and go, you know what, after 10 years of NHR in Portugal, I might want to go, you know, to America. I might want to go to somewhere else in Europe, or I might want to go to Australia. And all of these things, it's important that you deal with people that understand what your goals might be, because if you know at the beginning, that's great. But as things change, that will help us build your wealth plan going forward, so that in the future you won't have any surprises, you won't have any shocks. You know, you will know exactly where you stand, exactly why you're doing things. You know, one of the biggest phrases I love is when you buy in haste and repent at leisure. It's that bit where you're rushed into something that you think is right, but then actually what you don't think is about the long-term issues. And, you know, it's the same for, you know, it's what works in America will not work in Portugal. What works in Portugal will not work in America. What works, one of the good things is a lot of the EU things are portable around the EU. You know, if you look at the insurance structures, they are generally savings vehicles of choice around Europe. So if you move from Portugal back to the UK, or you move from Portugal to Italy, or, you know, wherever you go, these structures tend to have good tax benefits wherever they go. But, you know, it's each person's individual circumstance, but it is vital. You are already a cross-border person. You've already got two jurisdictions. And as I say, in the UK nationals in Portugal will have seen that, as Duarte said about the Rachel Reeves budgets. You know, they have caused you problems, but they've given you opportunities.
Exactly. Duarte, again, just before we sort of get move on a little further, obviously Duarte, Portugal operates under a civil law system which can be unfamiliar to many international families. From your perspective, why is coordination between sort of legal, tax, and wealth professionals so important?
It is completely important, not only in Portugal, but again, cross-border, regarding cross-border clients. Regarding our own system, it is, for example, we always suggest to have a will in Portugal. For example, we usually start all the time with this. Again, because moving to Portugal or by any chance to any country in the world, it can be a lot about taxation, but it's not only about taxation. So it's important to plan the future. It's important to have some estate planning as well. So we always suggest to have a will in place if there are, of course, Portuguese assets to be distributed or to be having in consideration. More than that, and regarding the connection with the taxation and the legal side, again, assuming that most of our attendees are residency authorization holders, using two examples on what we can do. Using the D8, I'm sure that some of the attendees have used this, so the digital nomad visits, it's very interesting on paper. So it is a very interesting vehicle to have a Portuguese residency authorization, and of course it works very well. But if not properly analyzed in terms of taxation, can be a huge problem. Not only in terms of personal income tax, because the D8 demands someone to have a work contract with a foreign company, let's assume a US one, and this someone will be working from Portugal. This salary will be considered a Portuguese tax source and will be taxed in Portugal and not exempt under the NHR. Second problem, this can create a permanent establishment in Portugal for the company. From my experience, most companies are not interested in having a permanent establishment in Portugal or in Europe. That's why this coordination between all the experts, all taxation, legal, estate planning, wealth managers, we should all work together because the common goal is the same, is to have an efficient structure, a good tax planning, and avoiding problems in the present and essentially in the future.
Okay, thank you, Duarte. Thank you for that explanation. We're nearly towards the end. We're going to come on to the Q&As. But just one thing we want to do, because over the majority of our webinars over the last 12 months or so, where we've sort of spoken around this subject matter, people have inquired about a specific product, which is insurance wrappers. So we thought on this webinar, we'd sort of address this option and sort of delve a little bit deeper. So Chris is going to give you a bit of an overview. And again, we have a short sort of illustrative slide to show how early versus late planning can affect flexibility over time. Now, we understand that everybody is different, and this is really just simply an illustration really of why sort of timing matters. So Chris, I'm just going to get these slides up for you. Here we go. And just let me know when you want to go across to the next one.
Yeah, okay, we'll do, Steve. Okay, thanks, Steve. I mean, this is talking about insurance wrappers. We could be talking about just holding stocks and shares directly. We could be talking about anything. But the benefits, insurance wrappers do give a lot of flexibility. You do pay a price for that flexibility. There's a charge for these structures. But what they do is they allow you to buy and sell without any gains within the wrapper. Now, that means that your portfolio, your investments can be managed without reference to any tax issues. Now, if you want to just buy and hold for 8 years plus, then you will get down to a 19% CGT rate in Portugal. But if you want to actually manage your money, if you want the money actively managed, you want it in a place where we can do that, then the wrapper does give you no tax on realised gains within the wrapper. The tax only applies when you withdraw. So that means that you're in total control of when you pay the tax and if you pay the tax. And with these structures, you get a reduction in taxation after 5 years and after 8 years. And I think on the next slide, Steve, we cover that reduction. And this is why planning early really, really matters. So as you can see from the slide there, planning early matters because, if you hold it less than 5 years, you have a 28% tax rate. If you hold it up to 8 years, you have a 22.4% tax rate. And if you hold it more than 8 years, you have an 11.2% tax rate. Now, what this means is your gain is taxed at 11.2%. So after 8 years, if you made a withdrawal from your insurance structure, you would have a gain that would then be taxed at 11.2%. That's not the whole amount. A big proportion of what you withdraw would be deemed to be your original capital. So that's why people often talk about saying that the effective rate of tax can sometimes be around about 6-7%, because over time you're getting payment back of your original capital plus a tax rate. So for instance, you may withdraw 100,000 euros, and if, let's say that 30,000 of that was gain and you were taxed at 11.2% on that 30,000, you can see you'll only be paying a tax of around about 3,500, 4,000 euros on that 100,000. So effectively, to get that 100,000 euros out, you've only had to pay 4,000 euros in tax. I hope my maths was there. That was off the top of my head. But what we can see is that these types of structures do give some really, really strong tax breaks. They're not for everybody, but what they do is give you the flexibility and the choice, and the insurance structures will move around Europe with you. All the insurance structures that we use are European insurance structures, so they can move from Portugal to the UK, Portugal to Ireland, Portugal to France, Portugal to Spain, Italy, and still work and still give you benefits. So that's kind of, when people talk to us, we find a lot in the discovery calls that we do after here, people look at this and think that sometimes these tax breaks in Portugal are too good to be true. But actually, this is what the Portuguese government want people to invest into, to encourage them to save. It's the same reason that they reduced the tax rate, I think it's 2024, from 28 to 19% if you held an asset for 8 years plus in a unit trust or in a stock and share. So I hope that's covered that, Steve.
Lovely. Thank you, Chris. And again, anybody that is, interested to see if obviously this particular product, would apply to their own personal situation, again, please sort of reach out to us and we can arrange, this is that no obligation call. You can sit down with Chris or one of the members of his team to discuss maybe how that fits in with your long-term planning. We're now going to sort of move on to the Q&A session. Again, lots of questions in there. I can see that Chris and Dwight have been answering away. Again, as I said, if we don't get to the questions, all of the questions in the Q&A, then obviously the team at Portugal Pathways will be reaching out to you individually to either answer those questions or to offer you a link to obviously book a no obligation sort of consultation call to discuss it further. So let's do a couple of these questions before we wrap up in the next sort of 5 minutes or so. So question from Patrick. What is the timeline for implementing a strategy for tax while still under NHR? How long does it actually take, Chris?
That's a good question. I mean, I think the timeline for implementing the strategy would from the moment you start, it's always changing. I think depends on what taxes you're looking to work with. It depends on what you're trying to achieve. As I said earlier, we like to see our clients twice a year just to make sure that everything is running smoothly, to make sure that there's been no tax changes, to make sure that nothing has happened in the meantime that may cause the strategies that you've got in place at the moment to fall foul of any new laws. But a timeline to start setting things up and getting things in place, 3 to 6 months would be a start, and then you'd want to review them at least annually, I would suggest.
Thank you, Chris. Thank you. One from Anna. I think, Dwight, if you could take this one for me. She's asking, just out of curiosity, but how often do you see people relying on planning ideas that worked in another country but don't translate well in Portugal?
Very often. Actually, one example, I mentioned the D8 option, so the digital nomad visa in a lot of countries works as a non-taxation residency authorization. In Portugal, it's not the case. And we have a lot of clients coming to Portugal thinking that they will not be paying any tax with a digital nomad. It's not the case. One other misconception, or at least something that needs to be considered, is sometimes tax authorities from different countries consider income and classify an income differently. Chris briefly mentioned this regarding pension income in Portugal. Sometimes it can be considered pension income, but sometimes the Portuguese tax authorities can consider it as a capital income. And the same happens with different tax administrations over the world. So sometimes the clients arrive thinking that they are receiving a type of income, and this is not classified as the type of income in Portugal, and therefore has a different taxation in Portugal. So it is very, very often. So the idea is to plan in advance and continue planning. I would use Chris' words, yearly.
Yeah, absolutely. Just sort of one last question. And again, Chris and Dwight, you can both jump in on this one from Kelly. Do I have to revisit planning assumptions if my personal circumstances change, even if the tax rules haven't?
Do you want me to take that one?
It is, of course. The answer is relatively easy. It is, of course. Even the taxation rules, from my perspective, of course, even if there are no changes in taxation rules, if personal circumstances change, we need, of course, to revisit the situation. Chris, I don't know if you agree.
Totally. Yeah. I mean, it's, as I say, one of the easiest questions in the world. If your circumstances have changed, you need to review what you've got, because it may well be that they don't now fulfil what you wish to achieve.
Okay, thank you, guys. Thank you. So we're gonna sort of wrap up the webinar there. So we didn't get to all of the questions, but again, we will reach out to you. I can see a number of you have obviously already clicked on the link and requested a consultation. So again, the team will get round to that within the next sort of 24 hours or so. Again, before we go, I'd just like to ask both Chris and Dwight just for a one key takeaway with regards to today's topic. So Chris, just going to start with you.
Well, the key takeaway, I hope, is something we've spoken about, is, don't be afraid to sit down with advisors, both legal, tax and wealth management, and put your plan in place. You can't start too early. And I would suggest, the moment, not the moment you get off the plane, but, if you look at our polls, I think there are, 60% of our people were uncertain around the future tax treatment. And, 41% have been between 1 and 3 years into their NHR journey. That's a sleepless night scenario. What you need to get to is get some sleeping pills. And that's what all your professional advisors will do. Your legal advisors, your tax advisors, and your wealth managers will give you the information that will allow you to sleep soundly at night and know that you put the plan in place that you want. And it's like everything: get a plan, work a plan, and review a plan regularly.
Lovely, thank you, Chris. Dwight?
Before my key takeaway, I've just seen that there were some questions. I'm sorry, I was trying to answer them, but for some reason, probably for my own stupidness, I was not able to reply. So sorry to anyone that had made the questions. I'm sure that we'll be able to talk afterwards. My key takeaway: don't think that the 10 years is a lifetime. It is not. It's just around the corner. Okay, so a little bit of plan ahead, having considerations, multiple changes that will happen during these 10 years. Hopefully not in terms of the taxation itself, but in terms of personal lifetime, and start planning the future now. Using an expression, the future is now. So it is in fact the time to start thinking about options, and perhaps starting to working on that.
Lovely. Well, a big thank you to our audience for staying with us today. Again, we will be sending out a recording of today if you wanted to go over some of those topics. And again, we'll follow up with all of you with regards to the option to book an appointment or a consultation with one of our team or one of the panelists for today's webinar. Big thank you to Chris and for Duarte for their time and expert insight today. Our next webinar is not too far away. It's on January the 27th, and we'll be looking at the latest updates on Portugal's luxury new homes market for 2026. Again, I think one of my colleagues will be sharing a link for that one as well. And again, if you want to find out more about our forthcoming webinars or any topic relating to Portugal, the relocation to, or from an expat's point of view, please visit our website at www.portugalpathways.io. Thank you very much for joining us, and we'll see you again soon. Goodbye.